Hello and welcome to this week's Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com. And in this video, I am going to cover another little trick to trading, kind of like the one I gave you last week, which was to watch out for firsts. And the first in this case that I was talking about last week was the XLU having broken the 50-day moving average here, which is the blue line, and then consolidated. And the first would have been that if it breaks down from that consolidation, that would be the first time that we've seen it do that since the move began. So in other words, every time it's come down to the 50, in this case was just bounced right off it, it's always settled, consolidated, and worked its way back. Settled, consolidated, worked its way back. So in this case, it settled, consolidated, but it didn't work its way back. So I'll get a little bit more into that, and I'm going to show you another thing to look out for on down days like the day we had right here to help you identify the spots in the market that are worth trading back to the upside and which ones you should avoid on the downside. Before I get into all that, however, if you're just finding us on YouTube, please be sure to subscribe. If you're just finding us on YouTube, please like us. And you should also know that you can find more videos like this at marketgauge.com/tutorials, as well as even more trading insight and information on our Twitter feeds at MarketGauge and at Market Minute. Finally, make sure you're watching this video in HD by changing your settings in the lower right-hand corner if you haven't already. So just to pick up where I left off in our last video, the point was twofold. One, the first, which I just explained to you, we don't want to see XLU break down, but from a bigger picture market rotation point of view, there was another thing going on, and that is we've got XLU, which has been leading the markets to the upside for most of the year. I might even argue all of the year. And now it appears to be rolling over. And it's not just that it's breaking its 50-day moving average, which is right here, but an indicator that we look at that determines whether or not a stock or an ETF is a market leader or potentially a market laggard is this triple play, as we call it, indicator down here. And the top one measures the strength of price, and the bottom one measures the strength of volume. And the simplest interpretation of this is if the blue line is over the red line, then it's a market leader in price. If the blue line is over the red line in volume, it means that the volume is in an accumulative position, which is good. And then you want to see your price action confirm that. Now, what you don't want to see is a situation like we had in XLU, which is XLU, as it's pulling back, taking out the 10-day moving average, it's triple play price action. We had blue under the red, and that's telling you that this consolidation here is weak. So when you get to a 50-day moving average and you have a negative setup in triple play, those are the ones you want to avoid. And this is why. And if you combine that with the first that I talked about in the last video, in other words, you combine it with a breakdown under the 50-day moving average, it's very often you'll get exactly what you see here, a significant slide to the downside. Now, if you think about this in the terms of the big picture, you've got the market leader, which granted, you don't really want to see a bull market led by utilities, but that said, it had been, is kind of rolling over. And the other thing that we talked about in the last video, the flip side of this, was the XLFs. And the XLFs are the financials, the big banks. Now, the part of the rationale behind this could be that if interest rates are potentially going to rise, then the utilities become less attractive, and in that case, XLS would become more attractive. So again, if we look at the same type of analysis that I was just talking about with our triple play, we can see that the triple play indicators for the banks they turn positive in here at about the same time that the XLFs were turning negative. Now they did dip a little here, but that's okay when they come right back. And now they're in a situation, could be better on the triple play, but it's positive enough that if the XLFs head higher, this is likely to turn up. And at the same time, XLU's turning down, it makes a lot of sense that you see. It makes a lot of sense in terms of explaining the rotation in the market going potentially from the utilities into the financials. So last week I said, look, keep an eye on the financials. Well, fast forward to this week. What do we do now? And the SPYs actually, or the markets in general, have just given us a great opportunity to get a read on what to look at next. So when the SPYs break, or when the market pulls back, you want to take a look at which areas of the market, and I'm going to use ETFs in this case, but you can do the same exact thing with the stocks. Which of those areas of the market don't pull back as much? Now, that's what the SPYs look like today, and I want to give you a frame of reference that makes this an easy, I call it an easy trick in the beginning, but if the markets do what they've done today, which is the SPYs trade below, and in fact now closed below the prior bar's low. They're in a decent trend, and they close below the prior bar's low. They should not continue the next day. If they, and when I say they should not, if the trend is still good, they really shouldn't continue the next day. And in which case, if you buy the stronger stocks and ETFs, if the market turns around, you'll be in great shape. So the SPYs did that, but the Qs, unless they snuck one in, all right, towards the end, they did it also. They closed down under the prior day low, and the IWM matched it. And it didn't close right below it. So this is ideal. It's ideal because you don't have agreement in all three of those indexes. Even if you did, I'd still say this is what you want to do. But the fact that you don't have agreement gives us a little bit more confidence that potentially this was just a hiccup and a knee-jerk reaction to a strong day the day before. Here's what you want to do. Let's take a look at some of the other areas of the market and look to see which ones have two qualities. One, they have good leadership to begin with down here on triple play, and two, they didn't close below their prior day's low. Now, in the middle of the day, when we don't know where the market's going to close, we just look at where they are trading. Put on top of that a trend that's in a good location, and you have a recipe for finding something that pulled back but really is demonstrating that it's strong. And if the market resumes its uptrend tomorrow, you want to take, or the next day, you want to take a look, keep your eye on retail, in this case XRT, as a place to look long. Right now, it's right up against critical level of resistance, so it's natural for this thing to pause here, but with a down day in the market and it's still holding strong, that gives you even more reason to focus on it if it breaks higher, because it's telling you it's trying to break out of this level. Now, XRT I think is particularly interesting because this 46 level is a pretty big level, and if the market is going to continue to move higher, it would be natural for us to look for the market to rotate into some new areas. And XRT, for all intents and purposes, really hasn't gone anywhere in the last 6 months. So keep your eye on XRT if it heads higher, and use yesterday's low as a good frame of reference, because that's the low that the markets just took out today. And again, I'm focusing on XRT because it's got good triple play indicators, both price on the top here and volume here. And so if it continues higher, I'd expect it to continue. Let's take a look at SMH. SMH is the same story. It's got a good leadership line. It's in a good trend. And yes, it pulled back with the market today, but it didn't close below this prior day's low. So tomorrow, keep an eye on that prior day low. It could be a key level. One way you can get really tight stops. We teach that in a lot of our courses. And the other one that's interesting today is the IYTs. So the IYTs actually closed up from their open above the prior day's low. Now, these do not have a good triple play. So for this one, I'd be more inclined to kind of sit and wait, see if it can break 142. But based on the one-day price action, it's one you want to keep an eye on if it starts to move higher. If it moves lower, I would stay out of the way. Let's take a look at the drugs, biotech, as I'm a fan of catching these trends. And so IBB, let's take a little bit of a bigger look on this. So this thing has broken out of a major area, this 288 level, and it did so with a strong triple play. Now, today, it's closed under that prior day's low. Now, it's also back under its 10-day moving average. Neither of those things are good, and therefore, we want to be careful if it continues to move lower tomorrow. So by just looking at, let's look at one last one. By just looking at where today's action is relative to yesterday's action, when the market has a pretty decent down day. I mean, it wasn't disastrous, but it was a significant down day. And if you can identify the areas of the market or even particular stocks that held up relative to that reference point of the prior day's low, it enables you to really focus in on stocks that could move the next time the market moves higher. And OIH, really interestingly, closed at or near the prior day's high. So this is definitely one to keep an eye on, and you can see that your triple play is turning. Now, once you get the hang of all this, you can actually use it to draw some conclusions like I did in the last video. Sector rotation from XLU into XLF. What you've just seen here is we've got potential rotation into the XRTs, into the OIHs, and maybe coming into the transportation, as well as stuff seems to be rotating out of the utilities. And I guess as I'm going through that, probably should take a look at the consumer staples, which was another area that had been leading the market. And we can see that it's rotating out of that in terms of triple play, and it closed significantly lower today. So all this thing has to do now is break this 50-day moving average and kind of follow through on that break, and you'll have the same scenario that you had with XLU, and then the rotation will really be clear. All right, so really simple but powerful stuff. Keep an eye on it. Hope this helps. Let me know what you think of it with comments in the chat below, and I will see you in the next video.